Rates have finally dropped, but hold on, don't refinance just yet. You're gonna see many advertisements telling you rates have finally gone down and you need to refinance right now. Before you make that call, I'm gonna go over 3 reasons why you should not refinance. And if you aren't aware of these, you can lose thousands of dollars. If you're new to the channel, my name is Christian and I've been in the mortgage industry since 2001. Now, there are many high pressure salespeople and we are just coming off one of the worst years in the mortgage industry. Many loan officers have left and those remaining can be really hungry for deals. Now, being hungry for a deal isn't necessarily a bad thing, but if a loan officer didn't put money away and they're in dire need, you might get sold. So in this video, I'm gonna go over why you should not refinance. Yeah, that's right. I'm telling you not to refinance. I know it might be different than what you're hearing out there, but these next few minutes could save you thousands of dollars, so be sure you understand each reason. If you find value in this, please be sure to like and subscribe to the channel. That would be helpful. Thanks so much. Many refinances don't make sense. And many people just look at the monthly payment itself, and I get it. They're trying to lower that monthly payment to free up some money for other things. But you have to look at the cost in order to lower that monthly payment. Then you have to figure out how long it takes for you to break even on that. So for example, let's say you refinance and your monthly payment drops from $2,500 to $2,250. Hey, I'm saving $250 per month, great. Now, let's say that refinance costs you $9,000. Now, this is typically rolled into the loan, but it's still a cost. So this means it will take you about 3 years to break even on this refinance. Now, that's okay if you're planning on staying in the home for 5 years or more, but it doesn't work out if you're planning on moving before that 3 years is up. So make sure your break even makes sense. Now, there is an exception to this, okay? Let's say that things are just really, really tight right now, and that $250 monthly savings can make the difference between you going late on your payments or making them on time, right? In a case like that, I fully support it because once you start going late on payments, a lot of other problems start to come up. So it's better to take the hit of whatever the costs are to lower that monthly payment now so you can make all the payments on time and be in a better position. Now, if you've been in your home for a while, sometimes it'll look like you're saving a lot monthly and it will meet that requirement number 1 that I just talked about a moment ago, right? Because you're saving quite a bit of money and the cost is reasonable. But what you're doing is you're stretching out that loan term. So let's say you've been in the home for 10 years and you have 20 years remaining. If you refinance that mortgage to a 30-year term, it's gonna save you monthly and it's gonna pass the test we talked about earlier, but you're adding on 10 years of interest. So you gotta really be careful here. You wanna look at what the difference is in the lifetime interest. Now keep in mind, nobody stays in the home for the full 30 years typically, or at least I haven't met anybody that has, but you still wanna be aware of what that is. So when you're making this decision and it's saving $250 a month and it breaks even in 3 years and it's adding $75,000 to your total interest, then you need to be careful there, right? So what you can do with this is if you are refinancing, let's say you have 20 years remaining, okay? You can refinance to a 20-year term. If you have 25 years remaining, you can do a 25-year term. You don't have to go to a 30-year. You can then recalculate and make sure that it makes sense for you. So don't refinance if the break-even time doesn't make sense, and don't refinance if it adds a lot of lifetime interest. An exception would be if you're struggling and this refinance makes it so that you can make your payments on time. I'm all for that, and it's better to refinance before you start going late on payments, right? Once you go late, you're not gonna qualify. Now, sometimes the refinance can look even better if we're paying off debt. So, if you have auto loans, credit cards, student loans, and you pay those off, you could be looking at, wow, I'm saving $2,000 a month, and this is huge. Now, why that could be right, you have to be careful of what you're adding on the back end, okay? This could be a really good thing, or it could be something that leads you into a lot of trouble. So I'm gonna tell you why. First off, you could be stretching out some of the loan terms. What I mean by that is if you have an auto loan and you have 4 years left on it and you convert that to a 30-year loan, it's gonna save you a ton of money monthly, but it's gonna add a lot of interest because now you're paying that loan for 30 years, not just the 4 years you have remaining, right? Second, you have to be careful not to get in a cycle of debt and refinancing. So some people use their equity to pay everything off and they free up a lot of money and then they're in a great position. So now they don't have any car payments, they don't have the credit card payments, all they have is the mortgage, and this is great, right? The stress is gone, they feel financially comfortable, then they see that shiny new car because there's no financial stress. And they think, what would really be nice is that new car in the driveway, right? So a couple of years later, we're in the same situation, right? So you don't want to get in this trap. Now, if things are really tight and saving that $1,000 or $2,000 a month makes the difference between survival or not, then go ahead and refinance. Just make sure that when you save that money, that monthly, you're disciplined with it. If you're not, you're gonna be in the same position in a few years, but with less equity to help bail you out. Now, if you have a lot of equity, you might be thinking, hey, should I look at getting a home equity line of credit, right? They can be awesome, but they can also cause problems, major problems. Now take a look at this video right here, and please be sure to like and subscribe. Thanks so much, guys. We'll see you on the next one.